Hi, everyone. Welcome to the Research at Citi podcast. I'm Anne Malone, the North America head of equity research at Citi. Happily, with me on the podcast today is Filippo Falorni, our U.S. beverages, household product, and personal care analyst at Citi. Today, we're going to talk with Filippo about the impact of the GLP-1 drugs has had on the consumer sector, the potential ramifications of the newly introduced oral format, where the drug can now be taken in the pill form. Filippo, thanks for joining us.
Thanks for having me on.
So, you're the consumer guru here, but first let's talk a little bit of healthcare. Let's set the scene on GLP-1s just so we can understand the impact. So what's new and what's the sort of numbers we're talking about in the US population?
Yeah, that's a great starting point, Anne. So, look, we believe we are really at a tipping point in terms of increase in adoption of GLP-1 drugs for weight loss in the US, right? We have two things that are happening that we think are going to significantly increase the potential number of users. Number one, we have the commercialization of the pill format. And then number two, there's going to be lower cost of the drugs with increased Medicare and Medicaid coverage, and increasingly new action from the current Trump administration that were taken in late 2025 that could really lower the cost for consumers from over $1,000 a month to something between $200 and $300 a month in terms of these drugs. What does it mean in terms of population? Our pharmaceutical and biotech analyst, Jeff Meacham, forecasts that GLP-1 users could increase by more than 30 million in the US over the next 10 years, from the current about 5 million user base that are taking on a recurring basis to over 35 million, 37.5 million by 2035. So it is a significant change. And remember, what happened in 2023 is that the market started to focus on these weight loss drugs. But remember, back then, the number of users was very small. We're talking about 1 million or so users. Now, with the significant increase projected over the next 10 years, we believe the implications could be far more pronounced.
So my joke had always been we'd never have a heavy celebrity again. So it's moved past that population, the general population. So one, this is very much a US phenomenon. That's true.
Correct. That's mainly right now, the big increase in adoption is going to be mainly focused on the US. But one thing to remember is that there's significant pent-up demand around the world as well. A lot of the pharmaceutical companies are really focused on the US throughout 2026, but 2027 and beyond, you'll start to see pharmaceutical companies really target also some of the international markets. But for now, the big potential impact is in the US.
And we're talking about kind of ready, set, go for spring. But is that really a surprise? Like, wasn't all of this known that there was a pill format coming and that perhaps this was going to bring cost? And then we all talk about people staying on it, right? But wasn't all this known, or is there a surprise that's in here?
Yeah, look, we knew about it, right? We knew about the timeline on the oral format. I think what investors generally, especially on the consumer side, are a bit underestimating is the potential game-changing impact of the pill format and the lower cost. Because I think there's a bit of an anchoring bias towards what happened in 2023, which was a lot of headline noise, but pretty limited impact on fundamentals. And again, we were talking about like 1 million or so users back then. So clearly, it didn't really move the needle materially. But if we are really starting to see the increase of adoption that our pharma and biotech analysts projects over the next couple of years, we are really going to start to see much more impact on changing consumer behaviors here.
So back then in 23, it was don't panic, there aren't enough. I think the message now is maybe a little bit of panic is worthwhile.
Correct.
And to make sure we cover healthcare before we get into your area of specialty, and what happens with people staying on this, right? What's the dropout rate? That would be another like blow, right? Which people might sample a shot and get off it. Do they think people stay on it longer when it's a pill?
Yeah, correct. So that was part of our survey work that we did. We surveyed over 1,000 U.S. 1,200 U.S. consumers in the winter. And really what happened is that when you ask about durability of taking the drug and duration, like you're really seeing that 82% of respondents in our survey are saying that they would be willing to take the drug for a longer period of time if it was available on an oral format. And 50% of respondents said they would take it indefinitely. So clearly this is like a game changer. Like it could become like a daily pill for many consumers, like a statin, right? That people take on a daily basis. And also on the flip side of the equation, like you can actually see people also going on an awful lot easier, right? It could become more like of a wedding drug or a vacation drug that you start the pill, you take it, and then you come off very easily. But the fact that 50% of respondents in our survey say that they will be willing to take it indefinitely, it's a pretty big change compared to the injection.
I don't know if you've coined a new phrase, a wedding drug or a vacation drug. We'll have to think about that for a bit. Okay, so we take all this, it's time to perhaps panic. Let's start with your areas of expertise. So what does it mean to some of these consumer sectors? How does a company respond? Or do you think the companies are ready for it? Let's talk about that.
Yeah, no, look, absolutely. I think in terms of the consumer sectors, the biggest potential risk here is really the packaged food group, right? These are companies that play in categories that are seeing significant reduction in consumption for consumers on GLP-1 drugs. That's confirmed with our survey, particularly in the snacking area, right? Because these drugs really remove the impulse snacking, that impulse eating occasion. And so in our survey, the categories most impacted were sweet and salty snacks, ice cream, candy, and generally a lot of other of these different packaged food offerings. So the problem for these companies is that their portfolios are not prepared for the shift in consumption habits for a lot of consumers, right? Because what we're seeing in our survey is that where we're seeing an increase on the food side is really on the fresh fruit and vegetables. It's on the protein options like poultry, fish, eggs. And those are areas where most of the packaged food companies really don't play. So that's a significant potential negative impact. In the beverage side, on the other side, which is the other part of staples that can get impacted, we are also seeing a pretty significant reduction in alcoholic beverages, including beer, wine, spirits, including ready-to-drink spirits. On the non-alcoholic beverage side, the picture is a little bit brighter in the sense that you're seeing some negative impact in carbonated soft drinks, especially the full sugar carbonated soft drinks, but the diet sugar offerings are definitely doing better. And you're seeing an impact in terms of increased adoption for hydration categories like water, sport drinks, even energy drinks. It has the functional state of providing energy to consumers. And then protein shakes. So that's an area where a lot of beverage companies have been investing to offer protein in the forms of protein shakes. So overall, we think the beverage companies have definitely more ways that they can try to rearrange their portfolios to play in the categories that are seeing a benefit, especially the non-alcoholic beverage company. Alcohol is definitely more challenging to change the portfolios of those companies. But in terms of packaged food, we really see a pretty significant negative impact and not an easy way to really transform the portfolio to address the changing consumer behaviors.
So I'll go with two questions. One is, so if you were a consultant to these companies, what would you recommend they do? And two, you said the portfolios are not prepared for the shift. That's not a great statement, I guess, if you're a management team. So do you think stocks already reflect that? So we've seen that, or is that on the come?
Yeah, in terms of questions or advice for the companies, I would definitely advise them to really take a deeper look at the way they are offering the products to consumers. Because one thing that a lot of companies, and we just came back from the CAGNY conference 2 weeks ago, a lot of things companies are doing is really trying to add protein to a lot of their offerings. But the problem is if you're adding protein in a format that consumers don't want to take, for example, like chips or cereal, it's going to be hard to really convince those consumers to stay within your portfolio. So it's really more coming up with innovation that really stretches the portfolio or focus more on M&A, right? We're definitely expecting an increase in M&A activity across the space. We've already seen it to a certain extent. Some companies have definitely made more investment into the better for you side, into the protein, but like protein shakes, for example, as I mentioned before. But really, you're trying to change the product format that you're giving to consumers. And just innovating within your current categories, just adding a few ingredients, I really don't think it's the right approach here. In terms of, to your second question, is that in the stock and what should we expect from here? Look, we definitely saw the big multiple re-rating lower after 2023 and the first wave. But then stocks have come back up, especially year to date in 2026, with the just general defensive bid. I think if you are going to start to see another leg down in terms of headlines, and this time, as we talked before, you can actually see much more in the consumption data, there's definitely more risk for those companies that are more exposed to this changing consumer behavior. And I mentioned packaged food again, in beverages, more the alcoholic beverage companies, and even in the non-alcohol, the more US-centric non-alcoholic beverage companies. So I definitely think there's more risk to come, because so far, year to date, we knew about this spring timeline, but there hasn't really been a lot of impact on the stocks, given Staples has been more in favor with the rotation away from tech. So definitely more to come.
I would assume with M&A, the challenge is perhaps not too late, but too little. The math must be very hard. You own a big salty or sweet franchise, hard to find something, and it's not like you can exactly add protein to a bunch of pretzels,
Correct.
although someone's trying, I know.
It will take some time, right? Like the potential targets are definitely on the smaller scale, so it's
Right.
it's not an easy shift in the perception.
Did in the survey, or have you come across it? I know it's not exactly your area of specialty, but what about like cannabis? Does that use go down too, or like, and drugs have to some extent have been seen as a substitute for alcohol, I think, right? So,
Right.
did you ask any of that, or are there any studies on that as well? While we're
So
at
on
it,
cannabis, we didn't ask specifically in our survey, but we have seen in a lot of states that have legalized cannabis for recreational use that there's been a proliferation of cannabis offering, both in the sense of um, smoking products, but also in the sense of beverage alternatives, cannabis-infused beverages, hemp-infused beverages. And in a lot of those states, really, the issue for alcohol is that even though they're very fragmented, because no national company is willing to take a big bet on this space until there's federal legislation around it. But even though they're very fragmented, they are taking some shelf space and cooler space from the traditional beer, wine, and spirits companies. So it's definitely been a drag, but it's more the legalization. So that part of the business, I think, goes up much more tied with legalization, and you see the proliferation of offerings around it.
you did the survey and report in conjunction with several city analysts, I believe. So, giving a little airtime to John Towers restaurants, right? What's the
Mhm.
thought there?
Yeah, look, we've done this is a global collaborative node, global collaborative survey across all really US and international consumer analysts here at Citi. So the restaurant space clearly it was the other big focus, right? And based on our restaurant analyst, John Tower, really he sees the greatest risk to demand, according to his views and the survey results, at fast food brands, especially those fast food companies that have menus centered on carbohydrates and fats, right? Think about pizza, sweet treats, burgers, right? Those are clearly the companies that could see the biggest impact in terms of changing consumer behaviors. The other interesting thing is for the survey, GLP-1 users are reporting a reduction in restaurant weekly visits. It's a net 18% reduction.
Wow.
And spend as well. It's about $63 less per month in spending, which is about $5 greater than other consumers that are on other weight loss methods or other diets. So clearly a pretty significant impact both in terms of visit and spending. And again, that's more concentrated in those restaurants that have more focus on carbohydrates, fats, right? Like, so clearly you're seeing a pretty big impact. On the flip side, the areas that are a little bit more defensive is that the coffee shops and the coffee houses are really seeing a lot less impact in terms of both spend and visits. So Starbucks and like some of the other big chains in terms of coffee shops are definitely seeing less impact. And then the other interesting thing is that we're seeing from our surveys that GLP-1 users who are still going to the restaurants, including the chains, are seeing higher consumption of protein. And this is even higher relative to prior surveys. So that's a general net positive for those restaurant players that are focusing more on the protein, like the steak players.
Okay. Steak and chicken, I guess. Okay.
Correct. Steak and chicken across even the fast food side, right? So you're seeing also within the restaurant space, one way companies are trying to respond to this changing behavior is focus more on the protein in their menus. And you're seeing that across really the board, across different areas.
It's amazing how this will cross so many places. Retail, if I drop the weight, do I end up needing a whole new wardrobe? Is that on the positive side or?
Right. Yeah. That's one area that we flagged in our note as a potential beneficiary of this change in consumer behaviors and change in weights across the US, right? So our softline analyst, Paul Lejwe, he believes that the specialty apparel retail space are clearly benefiting from GLP-1 and will continue to do so from the greater adoption. So clearly, as people lose weight, they need new clothing, creating this beneficial replacement cycle in the industry. And look, in many cases, like the change in apparel becomes more of a need from a want, right? Like if you're changing your behaviors and if your weight clearly changes, you have the need to replace your wardrobe. So he thinks that in the current environment, the change in trends, in fashion trends, which are happening on an annual basis, are working in tandem with really the weight loss. And so you're seeing this kind of double tailwind for apparel. And this is clearly benefiting the softline apparel space.
And who doesn't like to shop, right? I'm going to use this opportunity. Our Global Consumer and Retail Conference is March 8th to the 10th down in Florida. So you can escape the snow, see a bunch of consumer companies, and there will be a GLP-1 panel with Jeff Meacham. So I think all of that makes sense from this, including the survey write-up. This podcast was recorded on March 2nd, 2026. Be sure to join me for our next Research at Citi podcast, which will feature our REITs analyst, Nick Joseph, who will just return from the Citi Global Property Conference and provide us with an update on what's new and trending in the real estate sector. Feel free to explore our library of previous podcasts, all of which are available on this channel and other channels as well. Be sure to be on the lookout for our Research at Citi Markets Edition podcast with its 10-minute breakdown of the equity and global macro markets each and every week. Thanks so much, everyone, for listening. And Filippo, thanks so much for spending time on this interesting topic.
Great. Thanks for having me.
This podcast contains thematic content and is not intended to be investment research, nor does it constitute financial, economic, legal, tax, or accounting advice. This podcast is provided for information purposes only and does not constitute an offer or solicitation to purchase or sell any financial instruments. The contents of this podcast are not based on your individual circumstances and should not be relied upon as an assessment of suitability for you of a particular product, security, or transaction. The information in this podcast is based on generally available information, and although obtained from sources believed by Citi to be reliable, its accuracy and completeness are not guaranteed. Past performance is not a guarantee or indication of future results. This podcast may not be copied or distributed, in whole or in part, without the express written consent of Citi. Copyright 2026 Citigroup Global Markets, Inc. Member SIPC. All rights reserved. Citi and Citi and Arc Design are trademarks and service marks of Citigroup Inc. or its affiliates and are used and registered throughout the world.